We've got earnings alerts on Texas Instruments and Las Vegas Sands, both stocks lower in the after-hours session. Full team coverage standing by to break down the reports. Contessa Brewer digging in on LVS, but we kick things off with Josh Lipton and Texan. Josh.
So, Melissa, remember this stock heading into this print was up about 20% so far this year. It was only about 3% off its all-time high, but we are now giving some of that back in the after hours. As for the results, beats on the bottom and top. For Q3, EPS guidance 187 to 213 versus 197 on the top, between 4.4 and 4.76 billion. 4.6 was expected there. I checked in with Stacy Rasgon over at Bernstein. He says the quarter was strong. Gross margins also strong, but revenue guidance, that was weaker than expected, and a surprise there. On the call, executives saying by end market, industrial, auto, and personal electronics were strong. As for lead times, most products are steady, but growing demand, they say, means some lead times are extending, so they are now adding capacity. On the call, I'll tell you, some analysts did sound a bit frustrated. They said strong demand, you're increasing supply, so why the conservative guidance, they asked. Executives simply saying the last few quarters have been strong. Our guidance does suggest another strong quarter. This is the best estimate we have right now. Stacy Rasgon saying that demand is strong right now, but they don't know how long that lasts. Nobody does, so maybe they just don't want to stick their necks out too far at this point. Melissa, back to you.
Josh, thank you. Josh Lipton. And Guy, why would they? And I also feel like we've been here before with Texas Instruments. Decent quarter, good quarter, and a move lower.
Conservative guide. It's all about the third quarter guide because the quarter is very good. Operating margins of 48% were stellar. I mean, it is a strong quarter, but the guide has people scared. And then they say, wait a second, why am I paying close to 25 times next year's numbers for Texan with, I don't know, 7% EPS growth when I could be in an AMD or an NVIDIA or a tech or a chip stock that actually has growth. And, oh, yeah, maybe we're paying up on the PE multiple, but at least it's justified. Huge double top now potentially at this 195 level. If you go back to April, the stock should probably trade into the high 170s, and then I think you buy it there.
Yeah. Grasso?
Yeah, interesting. Usually Guy and I are on the same page, and I agree with a lot of what he said, except for the last part. I think that this stock probably trades above that double top area of 197 that Guy referred to, and I think you can see this thing pop above 200. Obviously, the 10-year yield is going to have the impact on this, the inverse impact on this that we saw the OIH. So if you see yields continue to grind higher, the whole tech space will probably either move sideways to lower. But Texas Instruments looks like it's been building a base right around this level. So if I had a bet, I would bet over 200.
Shepard Smith here. Thanks for watching CNBC on YouTube.